Hi guys, hi everyone. Good morning, good afternoon, good evening, guys. Wherever you are, welcome to IC Market Webinars. All right, shall we just wait for 2 minutes and I will start the session. All right. Shall we just begin our session? Thank you so much, guys, for joining me today. All right. As you can see on the screen, today we will talk about Fibonacci extension. Okay, so I think 2 weeks ago, oh no, last week, okay, we will cover Fibonacci retracement. So today we're gonna cover Fibonacci extension. So before we start the webinar, guys, disclaimer first. All right. So this disclaimer, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation. And past performance is not guarantee of a personal recommendation and does not consider your personal investment objective, investment strategies, financial situation, or needs. IC Markets makes no representation and assume no liability as to the accuracy or completeness of the information providers, nor any loss arising from any investment based on a recommendation, forecast, or other information supplied by IC Markets, and risk warning, forex and safety, carry significant risk, and it may not suitable for all investor. Okay. Speaker today, my name is Peggy. I'm an investment analyst and a prop trader. And so, excuse me, I think I have a sore throat. My apologies. Okay. So the agenda for today. So basically, we're going to picking realistic target in the trend versus ranges. Potential take profit logic by using Fibonacci extension, and we're going to cover those basically it's an example we're going to use before maybe on gold and indices and crypto. Okay, so how are we going to use Fibonacci extension? Oof. I think I missed one of the slide. You hang on. So, okay, I think I missed one slide here. So I'm gonna put this over here. Okay. So what are Fibonacci extension? Okay, so So basically, they will say that the key concept to use Fibonacci extension is Fibonacci extension is the project beyond the original price to identify potential price target where trend may pause or reversal. Okay. Unlike Fibonacci retracement, basically Fibonacci retracement, you gotta remember that we use for the pullback. Okay, so the extension measure continuation level. Okay, so Fibonacci extension level, we have the first conservative target, which is 127.20. That is going to be Fibonacci extension, and 161.8 is the golden ratio extension, most popular one. Okay, 200% we use price doubling point, and 261 for the extended move target. Like, price have really, really strong kind of uptrend, and then you can use Fibonacci extension like to 261.8. Okay. And with so how we're going to use the Fibonacci extension with versus the ranges. So what is the different approaches? So you can see on the screen here, we see that for the trading market, okay? For the trading market, so we're going to use the target selection, which is aggressive, which is 161.8 to 200%. For the conservative, which is the most of the traders usually they are using 127.20 and 161.8. Okay, so the strategy that you guys can use is wider stop. Okay, so basically protecting against the pullback. You can use the partial profit at each level. Okay, you can use tail stop at the price extends for the ranging market. So for the for conservative only 100% to 127.20. Okay, expect as resistance at the range for the boundaries. Okay. Strategy tighter stop loss, which is near recent swing. Take full profit at the first target. Avoid overextended target. Okay. Okay. So why scale out important? It is something wrong with my. No, this is not the slide. Okay. Okay, so we're gonna look at the chart, okay, and we're gonna use the extension. What does it mean? For example, here, okay. For example, here, let's say we are at gold, okay, right now, okay, and basically it's here, okay. For example, right now we see that this is kind of swing low, this is swing high. For example, if let's just say that if kind of a price, okay, close below, a priority close below this swing, the swing low here, where is the next potential level, or where is the next potential profit target if you're gonna sell from this level? Okay, so you pull Fibo retracement, it's the same tools, right? You see that, okay, if price close below 100%, which is starting point, right, 1655, the next target on your TP1, we're gonna aim for 161.8, and this is a conservative one. Or if gonna be those that extend, which is like near the thing low here, we have the extension, which is 161.8. Okay, basically it said you're gonna sell here if price, okay, close below this, the recent swing here, this is gonna be your target, and this is gonna be the second target. Okay, so we use the extension when price close below the recent swing low, and then you can use Fibonacci extension, these two number. But what if like price really close below or all the way to 161.8, and then what we can do, right, you can add in 200%, which is, if we're gonna look at 200%, the 200% is somewhere close to for 2024, which is somewhere around here. I think the captures, you're gonna look here, right? Is this like swing? But usually, okay, it's here, right? I'm gonna put white color. Which is they will say that target for the training market, right? 161 or 200%. So they're talking about like right now, okay, I know price training. Let's say I go on a higher time frame. Okay, and then I'm gonna use the extension in this case, right? This is the recent high, this is the recent low. You see that this week training market price had really closed above 200%. In this case, we know that I think they already closed above the what is this? 61.8. You see that? You see that it really close above the extension. So another one, what we can look, might go sometime could be like 361.8. It's almost above there. Okay. But it's a really trending market. So the extension, like we're gonna use for the target, meaning that if price or the price close above the extension here. Okay, the first target 127 and 161.8, another one could be 200%. Okay, and another one maybe 300% or 361.8. Let's say if I'm gonna put adding another 300. Which is here, right? Price somehow slightly close above and now go below 300% extension. But this is how we use the extension, okay, for the training market. But right now, if let's say you sell, okay, you sell gold right now based on the H4, okay, and H4 time frame. Here, just take note if price really close below, okay, this swing, then we can aim for this to this, right? Which is 127.2. Yeah, target. Of course, target one, we can just aim for the recent swing first. If they're close below, then we're gonna use Fibonacci extension. Okay? Okay, I'm gonna continue. Okay, so let's just use for the example. Gonna use the example one. For the example one, okay. Here, I'm gonna use with the, they just use the EURUSD for the example, okay. Okay, yeah. Yeah. Now, let us look on the M15. We're going to use the Fibonacci extension. Okay, for example, let's say right now we know that price has kind of closed below here. Okay, and then we see that the recent low was at the price was this level, right? 49, 80. Oh, this is a goal. No, we're not gonna look at goal. We're gonna look at the EUSD first. Okay, I'm gonna remove. I'm gonna go to the right here. For example, here for just for example, like whenever price, close above this recent, right? So you're gonna use Fibonacci extension from this like a high to this swing low, right? See here. So whenever let's say price kind of break above, okay, and from here, based on historical time frame, we know that we're gonna use the extra price had closed above this resistance, right? Basically. So we're gonna use the Fibonacci retracement from the swing low to this swing high, correct? Okay, what are you gonna see? You're gonna see that price is pulled back to how many percent? Okay, price had pulled back to this 61.8 or 50%. I'm gonna put here, right? You see that price has pulled back at 50% here, right? And then your first target, which is here, right? That's 50% here. So first target, of course, you're gonna aim for this TP1, okay? So if price close above, okay, close above this high, the next target you're gonna aim for 127 and 161.8. Right, and then you can see after price pull back, break above, piece 161, you see slightly pull back, and then you can see that continue break above 161 and go to 200% extension. Okay, you see that is 200% extension. Okay, this is an example. And another one, let's look for the GBP. Look for the GBP. Right? For example, here, this high, right? Close above this impulse, right? Okay. From here, let's just say price close above the extension. You see that slightly go above 200%. And then another one is 261.8, but like for the more extension. There, right? But you see that you're gonna get target 127 and 161.8 for your TP and then price extended right now. Now, price make a swing low and swing high. We're gonna use Fibonacci retracement here. Okay, look here. Starting point 0, ending point starting point 100%, ending point is 0. You'll see that price pull back a respect, right? Here. Here. Okay. And after that, it go to this 61.8%. Now, right? You see that? Go back 61.8%, and then we're gonna target where? One is a swing high. Now, if price break above the if price break above the starting point, the recent high, and then we're going to use Fibonacci extension from where, which is first target. Definitely we buy from here, we're going to aim for this TP1 at the the high, which is 100%, TP1, right? And then if they break above, these are going to be the TP2. If they really close above, then you can aim for the extension 161.8. Okay. Because here it retraces where 61.8% from this high to this low, right? You will see that. Right? You see that 161.8%. Okay. What do you look for? You use our crypto. Okay. Right. Let's see. We look over here. Okay. This is swing high. This is the swing low. Okay. We know that price on downtrend. So if price pull back from this swing low, maybe to this 61.8%, and then we can target the extension. Okay, we can target the extension, or like on this one, price has pulled back here, right? You can see that pullback at retracement here, right? 30.2%. So price have broke below here. In order for to use the extension from the swing low to the swing high here, you will see that it go all the way where? Guys, I'm gonna remove. You see that price has go all the way here to maybe in this case 200%. Right? You see that? Right here we sell at 30.6%, like all the way break below this. Go first rejected from extension 127 and all the way close below 161.8 and slightly push below 200% and then price close above the 200% Fibonacci extension. You're gonna see the zigzag, something like that, right? You see that? Go back and here. Right? Now, 200% here. So right now, price has already created the swing high and the swing low. Okay, so we want to see the price pull back how many percent. We pull from the swing low to the swing high, and then we can add in this Fibonacci in the swing low. Basically, whatever it closes, we can pick. Maybe I just pick 50%. So this 50%, we're gonna highlight at the zones, right? Which is, let's just say somewhere around here. And we could say that is a pullback. First resistance. Okay, and now if price close below this, meaning that if price come here, okay, and if they pull back here, okay, meaning that, okay, if price pull back from this level, but right now price haven't pulled back, it said if these are the high, right, then we're going to use Fibonacci extension, meaning that if they're gonna pull to here, respect the first resistance by 50% and then falling. First we target, which is recent low. The second one is extension 127, and the next one, okay, we could aim for 161.8 extension, and then you look to the left, or maybe 161.8 on the left here. We have the kind of overlap support level. If you look really closely, somewhere around here. Okay, you see that it close by, right? They capture, if you want to get the weight is here. Support level, you see that. and we have Fibonacci extension. But the thing is, you need to wait for price to pull first to this, because I don't know how far price can pull back. So basically, we need to wait for price to form the high first. But right now, they haven't forming the high. Okay, do you see that? What about we use with the indices? Okay, now here it is. We know that price had already closed above this high. Okay, right? So whenever I have a close above this high, I'm going to use a Fibonacci extension. You will see that they kind of slightly go above extension 127 of the recent high here. The recent high here, right? You will see that they had respect 161.8. Now, we have the swing low and we have swing high. Okay, you want to see price pull back how many percent? If you want to see retracement from the swing low to the swing high, you can see that they retrace where 50% Fibonacci. Okay, now if price is close above this high, okay, at the price 26,612, if the close above, then we're going to use Fibonacci extension from this recent high to this descent low. So our Fibonacci extension we are using 127 and 161.8, meaning that, of course, first you aim for the swing, the recent swing. Second, the next if extension 127, and another one you can aim for 161.8 for the extension, meaning you're gonna see something like here, pull back, right, and then continue. One here, if they can break above this high, 127 and 161.8, or sometimes it can go all the way up to 200% or 261.8% Fibonacci extension. All right. All right. You guys have any questions so far? Okay. Shall we continue? No question? Right. Let me see. It's like here. Okay. Hang on. Because we already covered those example. Okay. Yeah. Right. So there is a common mistake when we draw Fibonacci extension. So like, okay, you using extension without confirmation. So don't project the target immediately. So basically what you need to do, wait for the retracement structure to form first. Okay. Second, ignoring market context. Same Fibonacci level behave differently in trends versus ranges. Adapt your strategy accordingly. Or nothing exists. Okay, market rarely hits exact targets. Scaling out captures profit while allow for overextension. Forgetting to tail stops. So after hitting the first target, move stop to the break-even minimum, protect your gain. So whenever, for example, like you want to use the Fibonacci extension, and I pull out the chart here. Okay, right? Like over here, okay? Maybe look for gold, or maybe others. Um, let's just say we look using the okay, for example. So now, right, we buy at this retracement. So basically, this is our previous point, or this is our buy entry, for example. Okay, my buy entry, okay, here. And let's say price kind of rising at least to like this 100%, okay, or swing, right? I'm gonna shift my stop loss. Also, I put here and then put my stop loss like below this. Let's just say this is my stop loss. If price rising, okay, I'm gonna shift at least protect here, okay, right? Price rising, maybe they might close the gap here, right? They might close the gap right here. Okay, I might move this to this, but let's just say price has closed all the way, let's just say, all the way to the this level is the breakout, green color, let's just say, okay, green, right? They close above, okay. Then I'm gonna shift my stop loss to somewhere around here, okay. At least if price rising, I would have gained, from this to this is my profit, right? This is my profit. Let's say price close above, I'm gonna move and keep closing to where? To above extend 27 toward the 161.8. I'm gonna shift to my stop loss to here. So my gain would be widened to here, from the entry to here, then here. Even though let's say price reverse and hit my stop loss, I still gain how many percent? I still gain like, wow, you see that? How many pip? Like 116, okay. For like here, like again, like, right? You see that? So this is how you use the trailing stop loss. Okay, and the reason why we buy, because I am gonna look here, right? Price has already closed above this high, right? And they're gonna make a break of structure, they make a higher high and low here, price pull back, and then we buy, pull back 50%. Okay? All right. So the key takeaway today, they will say that Fibonacci extension are for targeting, not entry signal. Okay. Just trend justify aggressive targets 161.8 to 261.8%. Okay, for the training, for the ranges require conservative exits at 100%, which is the recent high or the recent low, to 127.20%. Okay, you always scale out, like you take partial profit at the minimum level, or you use the trailing stop loss, okay, and maintain a minimum 1 to 2 risk and reward, or you can aim for 1 to 2 risk and reward, or even more. All right, adapt to asset class volatility and characteristics. So master the framework, then adapt to your trading style. Okay, That should be all about Fibonacci extension. So Fibonacci retracement we use for the pullback, right? They just say here. Okay, price make high, lower high. Okay. So now and price starting to make the high. So basically I will see that this is the high, this is the low. So we're going to use Fibonacci retracement just to measure how many percent price can pull back. It could pull back 33.6, 38.2, 50%, 67.8, or 78.6. For example, if price pull back 50%, and then they start to make the low. Okay, somewhere here. Then use Fibonacci X retracement, meaning that if price close below this recent low, right? X1 target, which is 100% first. Second one is they're going to be the ranging TP1 at 127 or TP2 and then 3P3 at the extension, meaning you see the market price make a lower low, lower high, lower low, lower high, lower low, lower high, and lower low. Okay, you see that? You see that? It's all well. Then after that, price start to make the like show you are forming the low, and then you can use the Fibonacci retracement to measure where is the like the pullback. So maybe they might pull back all the way to 78.6%. That would be possible as well. And then after that, you're gonna see that they might forming the low. Then you use Fibonacci retracement. Okay, if they break below here, the target could be 127 or 161.8. But let's say if price did not respect Fibonacci retracement at 78.6 and then they break above this high. Okay, I mean like they could break above this high like that. And price, okay, if they break above this, whenever you say about the break above, what you need to do, you put Fibonacci, right? It's supposed to like retrace somewhere 78.6, but it break above, then you will use Fibonacci extend in this case. Okay, what if they break above the starting point, which is 100%? So the next target would be 127 or 161.8 or even like 200%. But the commonly used are 127.20 and 161.8. Okay, if they break above the starting point, which is 100% in this case, because you pull starting point to ending point 0, price we expect the price gonna like retrace somewhere and then make a lower low, low high. But in this case, they push above the starting point and then this gonna be our target. Okay. For extension, right? Question. This is an example. So basically, the Fibonacci extension is done. Okay, this is the example. This is the like the slide. Okay. Let me know if you have any question, or we're gonna use and then we're gonna do the analysis for go together. Now, okay. So right now I'm gonna use Fibonacci retracement to do the setup for XAUUSD or Go. Okay, we're gonna put the tick here, right? We find the recent high and I find the recent low here. Okay, so one, I would say I'm gonna refer to this like swing, which is the first, which is done. I'll go to H4, right? Which is somewhere around here. And then we can highlight the zone, which is the extension, retracement, which is 61.8%. Okay, and then I do that. Okay, I already see there's a swing low to the swing high. Remember that we use Fibonacci extension in this case. So if let's just put this one at my first support, meaning that my first support here at 50% Fibonacci retracement, and the second support I'm gonna aim for the swing, the recent low. Okay, if price close above, meaning that I'm gonna expect something like that. Okay, they might pull back here and then they might want to continue to this again. Okay, or they not pull back, they want to break below all the way. Let's say they break below this swing, then the extension will be 127 here or this level. Okay, but right now, then we're gonna monitor whether price can, go back here again. Second resistance, we would aim where? Here. Right? And then we're gonna use retracement here. You're gonna say that, okay, we have 67.8 and a closest, but closer to second resistance, we have 78.6%. Either, right? Okay. Move, go back, yeah. If they not respect here, if they break above, then next one could be here. Meaning that blend maybe come back here again and continue. We don't know, right? Because right now they are being in H4. You're gonna look like that, seem like they are being ranging or forming the equal high. One could be equal high, like here or here. They might want to form the M pattern. So if they can close below here, then we might see the pullback, let me sell. So right now they're forming the M pattern. I think it looks similar to gold that was in the here, right? It looks similar here, right? Then they might see start the boom with somewhere here and continue. Okay, continue to make higher. So now they might doing like that. So what we need to do, we need to wait for price to fall. Yeah. Yeah. You guys have any questions? Yeah. Let me know if you have any question. All right. Let me do one for the BTC, okay? So for the BTC, first let's identify. So I think right now, BTC is being sideways right now, right? You see BTC is being sideways. Okay. So if we're gonna find the resistance, I'm gonna pull here. This one is the first resistance. Okay, and then we're gonna pull the retracement from this swing low, swing high to swing low. We can see that 38.6%. In this case, this really a trending market. Okay, so that's why they might have a small pullback at 38.6%. And then we can highlight this is the zones. Yeah. And then the first, we can aim for swing low. The recent swing low for the first support right now. So now what we need to wait for price to pull back. Then after that, we can see like price, it break below this swing low at the next resistance level. If you're gonna go on like this low to swing high here, you will say that price has, you can see that bounce off, okay, from this extension 161.8 here. Like you need in the bigger picture, right? From this, like this low to this high, you see something like that, right? And price has go bounce off from 127, and now you can see the bounce off. So I want to see if this gonna respect here. If they respect here, or maybe like next resistance here, then we can see target one, the recent one, or we can do the extension. But right now, we haven't seen anything yet. Okay. And then the next resistance, I will pick here. Second resistance. And then if you add in the Fibonacci retracement, you will see that 38.2% here, then 38.6 slightly above. So we're not gonna use, we only can use one. Okay. Here. Before they break, it's kind of ranging for the BTC, right? Somehow we're ranging here. Now in H4, they are being sideways as well. Right now. Okay. All right, guys. So we just wait, okay, for them to like pull back, or at least they break out of this being sideways. Okay. All right, guys. If you don't have questions, that will be all today for Fibonacci extension. Okay, take note that we use Fibonacci extension whenever price break above your starting point, right? Starting point. This is your starting point. When price supposed to retrace and then go down, right? But if they break above the starting point, meaning that we're gonna use the extension, okay, for the potential. One could be profit taking. Second could be our next potential resistance level in this case, right? But now price had, kind of pull back and continue to make a lower low, lower high, and then we can use also extension for the target. Right, they break the recent low, let's just say here. Okay. You see the price all the way to almost 161.8 extension. Okay. All right, guys. Since you guys don't have any question, that would be all for today, guys. So thank you so much for joining me. I'm gonna catch up with you again. I think after 22 next week gonna be covered by my colleague. All right, guys. So bye for now, guys. Take care. Bye bye.